Hi everyone, I'm Jen. This is going to be a basic stock analysis of Costco. This ticker symbol is COST. And disclaimer, this is for a school project. Don't use this as financial advice. I make a lot of mistakes, but I just want to learn more, so please feel free to leave comments. So, what is Costco? Costco was one of the largest retailers in the world, and it's membership only. It was founded in 1983, and it went public in 1985. But before Costco existed, there was something called Price Club, and Price Club was actually founded before Costco, and they merged in 1993. So both companies were public at the time, and they just merged together. They have right now they have 890 warehouses and they have over 70 million paid members. Like that's crazy, 70 million. And even though I say that they have 70 million paid members, that means they have close to almost 140 total members because for every single paid member, you're allowed to do a family like thing where you can add someone else and make them a member too. So that's super cool. And most of their money is actually made from membership fees. So they actually increased membership fees by $5 this year for their basic plan. But people still really love Costco. I mean, $5 over in the past, like what, 10 years is not that much of a price increase. But their membership fees in fiscal year 2024 took up around 65% of their net income. So they really rely on those membership fees and they actually aren't making much money from actually selling their products. And the reason why people love Costco so much is because you have huge quantities and good quality. So if you compare them to something like Walmart, they don't necessarily have the cheapest products, but they really strive to offer good quality products. So that's what most people at Costco are looking for. They have less variety than most stores. They said in their annual report that they have around 4,000 products for each warehouse, which warehouses are huge in comparison to an average retailer, which is like around 30,000 products. So they're really selective. For the SWOT analysis, some of the strengths include strong brand recognition. Everybody knows what Costco is. You've probably heard of it. Probably one is around you. They have really efficient operations. Like I said, they only have 4,000 products per store. So they really keep track of what is popular. They only keep the most popular brands. They're really efficient. They don't open as many hours as other companies do, but that's just because they want to reduce their um, not their wages, but the amount the salary. They just want to decrease operation costs. And they have a lot of success with their Kirkland brand. So Kirkland's their private label brand, and it's really successful. It's a lot cheaper than name brands. And some opportunities they have is enhanced e-commerce. So right now that it's only 7% of their net sales, but it's a growing thing. People really value um convenience and e-commerce is is growing faster than is a fast growing sector of retail. They have One other opportunity is making more sustainable products. If you've ever been to Costco, you can see they have a lot of packaging for the product, which is sometimes necessary, but you can see all the plastic, all the like triple layers that they use to have their items in boxes. And the third thing is global expansion. So Costco right now is planning on opening up 29 new stores in 2025, which is huge, which is around the same number as in 2024. And they're trying to expand not only in the US and Canada, which is where they're mainly at right now, but all over the world. So in Asia and Europe too. Some of the weaknesses tie into the strengths and opportunities. So even though they're really efficient in only having 4,000 items, that's also one of their weaknesses because when you go to Costco, you're only going to find the biggest brands. Like you're going to find, I don't know, Doritos, but you're not going to find some like random, just like a really unique chip. Like organic, I don't know, some up and coming new chip flavor that nobody knows about, that's not going to be at Costco. And their low online presence right now is one of their weaknesses because that is a really growing market. Another one is their heavy reliance on membership renewals. So because they earn so much money from their membership, it's crucial that they retain that and they make sure their customers are happy because most of the money comes from that yearly renewal, not from the actual selling of their products. Some of their threats include intense competition. In retail, the margins are really low. They have supply chain disruptions, which honestly, that's mostly for every company that I've been mentioning. But especially for Costco, we heard about the strikes in the news, and that really affects, people buying essential items. So if Costco doesn't have one of their products, that affects their sales, and one of the things they rely on is just fast, inventory turnover. Another thing is economic downturns, which is also something I mentioned basically for all the companies right now. But right now with inflation, if nobody has money to buy the $65 basic renewal plan, then Costco is really going to suffer. And even though they sell daily essentials, there still is Walmart to turn to and Dollar Tree to turn to at the end of the day that sell the cheapest products compared to Costco. So for their stock performance, I wanted to analyze them a little differently. Instead of just with their competitor and with S&P 500, I also wanted to add um, the XLP, which is the consumer staples sector fund. And that's just like a bunch of companies that sell consumer staples and they group them together. So you can see from the S&P 500, it grew 195% in the past 10 years. And I just got these values just from um, using today's number, Friday's number, and 2014, November 7th number. November 7th was also a Friday, I'm pretty sure. And that's how I got my numbers. Um, the consumer fund grew 70%, which is actually much lower than the S&P 500. Costco grew almost 590%, and Walmart grew 227%. So Costco is actually way better than the market and their competitor Walmart and its sector. So for financial health, Costco really has steady growth. And I put steady growth here because you can see the revenue growth is 5%, which actually not as much as Walmart, which is 6%. But if you look at the gross margins, it has way lower gross margins than Walmart, which means that um, as a percentage of the sales, the actual cost of the product is higher, but they're actually more efficient in their operation, managing their operating costs because their operating margin is 3.6% and Walmart's is 4 point around 2%. And they're also efficient in managing like non-operating costs, which is like marketing or something. And their profit margin is actually higher than Walmart, even though their gross margin is lower than Walmart, just by 2.9 versus 2.4. But it's still higher than Walmart for the profit margin. The current ratio is slightly higher than Walmart. This just means that they have a better ability to pay current liabilities with their current assets. The debt to equity ratio means that Costco is actually financed more through stockholders investing in them rather than debt and their liabilities. Um, Costco had a negative change in free cash flow in 2020, fiscal 2024 versus fiscal 2023, um, which is not good. But the return on equity and return on assets for Costco is higher than Walmart, which is good. And the inventory turnover of Costco is actually higher than Walmart, which is also good because that means that Costco, like all the inventory Costco isn't just sitting there. They have really high turnover rate. So people are coming in, buying, leaving, and that's a good cycle for the retail business. In valuation metrics, I concluded that Costco was actually a little overvalued because if you look at the P ratio, Costco's actually almost double that of Walmart. Um, and I remember the S&P 500 was around 27 for the PE ratio, so it's actually overpriced from the market too. You can see that people price it more than what they actually sell in their book values. Um, so maybe people really believe in Costco, and maybe that's a reason why they're overvalued compared to the competitors right now. But just looking at these ratios, it just means you're paying a premium for what you're actually getting when investing in Costco. Their dividend yield is 0.5% almost, and Walmart is 1.4. So Walmart actually pays a higher percentage of dividends. Their enterprise value also shows that it's overvalued compared to Walmart, and the PEG ratio, which is the price to earnings over the predicted growth in earnings. It just like takes into account how much you think they're going to grow and the P ratio in comparison to that. So even when you compare it with with the growth, Costco is still a little over valued compared to Walmart. When looking at Costco's growth over the past 5 years, aside from around 2022 when there was a plateau, Costco's been pretty consistent in its growth. I owe that to that they sell essential household items, and everyone needs, even if during a recession, people still need to buy food. People still need to buy toilet paper. That Costco has a competitive price with those things, and people are still going to buy from them. And they also have a 90% renewal rate, which is super high. So people are really, they love Costco. They keep on coming back. So I put Costco as a pretty consistent company. So my summary is that Costco is doing well, but it's a little overpriced right now. And the reason why they're doing well is because they have a steady business model. They it's a really cute photo. They give out loads of free samples. All their stuff is really huge. It's just that they have that brand recognition of those huge products, those low prices, and they actually treat their workers pretty well. They were listed as one of the best for worker benefits, and as long as they maintain their low prices and their like quality products, Costco is gonna do well. But they aren't some breakthrough. This isn't like a new um whole new growth like AI. It's been here for a while. That's why I'm saying it's like a steady and good company. And that's my conclusion.